Hello, everyone, and welcome to the StockManor.com studios here in the Black Hills of South Dakota. I'm your StockManor, Brian Johnson. I'm going to do a video for you guys. There really hasn't been a whole lot to update. Last week, I started talking about a symmetrical triangle, and guess what? We're still stuck within a symmetrical triangle. Started this back about, I'd say a couple days before November got going, and you can see where it's led us so far, and that is really basically nowhere. We're still stuck in consolidation here, and we're waiting for the break. So it's very, very clean. By the way, for those of you that might be looking up chart formations or keeping track of chart formations, it really doesn't get much more pretty than this. Really like what I'm seeing here on the all of the indices themselves. Now the NDX is not really playing along. It's not in a triangle, but it is in a consolidation, and it all looks pretty much the same. So let's plow through the video here and show you where we're at. Here is that symmetrical triangle. What we're going to do is just simply wait for the break. You guys have got to be careful in through here. It's real easy to get your hand slapped when waiting for entries or trying to take entries, and you get a little anxious and you jump into something, and a lot of times you get your hands slapped pretty quickly that way. So you always want to wait for the more conservative breaks if at all possible. Now we were day trading today. We had a really nice decent move down today, and then a really huge move upwards towards the middle of the day. So if you're day trading, you're still getting enough volatility here to kind of give yourself some opportunity to make some profits. And bigger overall picture though, if you're a swing trader, investment trader, it's probably been rough. You might even be getting beat up pretty well if you're trying to get in and then you're out and then you're back in and then you're out and then so on and so forth. It really doesn't pay to try to jump into this kind of stuff. You might as well just wait it out and get your better entry. Coming into tomorrow for the Dow, it's going to be above 12,200 and below, 11.8, 11.7, 11.6. Any one of those are really good entries to the short side, and those are a ways away. If you really want to be aggressive, you can hop in at 11,950 or 12,000, something like that. Clear these moving averages and see if you can't maybe pull a little bit of money off the table in and below some of these areas. Keep in mind, as long as you want to play the middle of this triangle, you have to be expecting volatility. And that's going to make things obviously a little bit tougher. Now we are in and getting into the middle of options expiration week, and holding Monday into Tuesday, maybe not such a big deal, but man, middle of the week, options expiration week, you can usually expect volatility. It's very rare that we have a very slow, very muted options expiration week. At some point, usually there's a pretty wild move. Could be up, could be down. Don't know yet. That's why we have to wait for that move. Just be expecting it, and when it happens, don't miss the move, because you might miss it all. You might be stuck. If it blasts upwards, we won't have to wait very long. We're not that far from 12,200. So another 100 points up tomorrow gives you your entry. And if it blasts its way upwards all day and you miss it, and you're not in, guess what? You might be stuck sitting around a couple of days waiting for it to consolidate again before the next major move happens. So when you get these type of levels, you need to make sure, have them in your charts, write them on a sticky note, backwards on your forehead so you see it in the morning, whatever you got to do. But don't miss them. Don't miss the entries. You really could miss out on something really big. So 12,200 up, 12,000 aggressive down, otherwise 11.8, 11.7, 11.6 to the downside. From a daily perspective, you can kind of see that same symmetrical triangle in here. We're holding above the 200. Keep in mind we moved up last week, held the 200-day, went up only to fall back down. This week we're up, holding the 200-day. How will it resolve? Down, up? That's why you got to wait. It's impossible to know at this point where we're at. If we break 12.2 and especially 12.3, it's probably game on for the bulls. We should see a pretty good push to the upside if that tends to happen. From an Elliott wave standpoint, it could be the beginning of something pretty big to the upside. So like I said, you just don't want to miss it. Make sure you have those levels marked in your charts. NDX stuck in a sideways consolidation. Look at this flat, going nowhere business for over a month. So if you've traded the Qs and you've been doing some day trading and stuff, not bad. We have good, 23 to 2,400 is our range. All right. So you've got 100 points to work with there, up and down. But man, if you've been investing, if you're a long-term investor and you've got money in the Qs, yeah, not much to talk about here. straight sideways. So once again, you wait for the break, and that's going to be 2300 or 2400. That's really your more conservative place to get going. I'm not a big shorter of the NASDAQ, so I would really rather you play this one long rather than short, but that's completely up to you. So 2300 short, 2400 long, those are really your entries coming into the middle of the week. You can see it's 1, 2, 3, 4, the last 5 weeks pretty much staying within this range of, I don't know, 2300, 2400. And the same thing is true of today's candle. Now we're only 2 days into the week, so we've got 3 days left before this thing really resolves itself. But man, look, nowhere for basically 4 weeks straight. Had a huge push here, but since we've been in this range, we haven't budged from it. It's very, very, very slow trading. However, you got to hand it to the bulls. This is a high base formation that is still bullish. That means you've still got to keep your bias to the upside when it comes to the NASDAQ. Breaking these levels down here, now the bears have something to kind of roar about. But right now, they got nothing. Nothing. SPX 60 minute trapped in this same symmetrical triangle. You can kind of visualize that for yourself. 1280, 1230, those are your two bigger areas. That's really what you need to be waiting for. You can get aggressive in through here, maybe back below 1240-ish or 1270, somewhere, whatever. If you want to get more aggressive, that's the place to take it. But the more conservative trades are definitely going to be closer to the 1280 and 1230 marks. We really wanted to clear some of this lower areas here and get back below this 20-day moving average, which once again, here we go, back below it, hold it for 1, 2, 3 days in a row. Bulls are doing a fantastic job, but trapped nicely between the 20 and the 200. One more reason to wait for that more major break, which is up around 1280. We get back above 1290, which has been a big area of contention along with 1190, and then maybe we can see the bulls really take off here, push this thing upwards. The VIX overall, though, it was up. Markets were up. For those of you that follow me, that is a divergence. Typically, you see the VIX down when the markets are up. So this here has got me a little bit on the, wait a minute, type side. It doesn't mean anything if it's one day, but if this continues for the next couple days or something, you really need to pay attention to this. As a general rule, when the markets go up, the VIX goes down. Okay, markets go down, VIX goes up. That's just the way it works. It's a fear gauge type thing. Right here, we're not seeing it. Markets go up, VIX goes up. Wait a minute. Something's not quite working out here. So I want you to keep your eye on that over the next couple days. Just keep in mind we are in a consolidation, and this confirms it. There's indecision. They really don't know exactly which way to go right here. That's why it's so important. If you really want to protect your capital and make money in the markets, you've got to wait for the more conservative breaks. You've got to wait for the better breaks. You can get aggressive all you want, and sometimes it pays off. But you know what? I've found that most of the time it does not, and it ends up burning up your account. You make 200, 300, 150, whatever, and then all of a sudden you give it all back plus in one shot because you get greedy, you get anxious, you get aggressive, and you take a bad entry, and then you don't get out and you stay with it, and before long everything you've made is gone and then some. Just don't be that person. Don't be that person. I'm really trying to teach people at my site not to be that person. It's very difficult. It's very, very difficult. A lot of traders struggle with that, but it is, you can overcome it. It just takes some discipline. So here we are again on the weekly side. I like it below 20. That really means more complacency to me. We're not there. We're at 30, and we've been wandering around this area for the longest time. Even as the markets move up, the VIX is going really nowhere. So it's anybody's call where this is going to go. We see a huge spike to the upside in the markets, though. You better be looking for a huge spike down in the VIX. You need that confirmation, especially if you're going to be longer term bullish on the whole markets themselves. FAS, I don't know, those lines, sometimes stock charts doesn't do a great job of holding on to lines. Anyway, point is, this is also kind of in a triangle itself. If you guys want trades, FAS, if you like these type of trades, I like it below 63 and above 70. Below 63, above 70. Let's see what that looks like on the daily. Yeah, same thing here. Below 63 and above 70. Those are your marks, cleanly trapped between the 20 and the 50, consolidating very nicely in and through this range. So there's your entries coming into the middle of the week for FAS. FAZ, of course, going to look very similar with the same triangle type formation. Go figure. Looking at 39.50 and let's call it 44. Let it break that 44 mark if you want to get long. Yeah, I think so. So those are definitely your better entries if you want to play those. A lot of people love to play these because they move and move a lot. You can see us trapped or stuck below the 20-day. We tried to get above it today and that didn't work. It came right back down below it again. There's not a lot of reason to get long the FAZ quite yet, and that's why I'm telling you, wait for that break above 44. That's actually not a bad entry, and you can maybe stay in that thing back into the 20-day moving average. 44 to 47.50, not a bad trade. But you got to wait for that break. Don't get greedy. You jump in too early and it can reverse quick on you, and then you'll end up in a really bad deal. So take those two entries that I have for the long and the short and use those over the next couple days. Put this stuff in your charts. Make sure it's there, and make sure you're paying attention to it, more importantly, as the week rolls on. Very odd that we don't get some, like I said, some sort of real strong volatility for at least a day during options expiration week. And with Thanksgiving coming next week, man, I would think that most people would try to get as much trading done as they could during this week and into early next week, because once kind of December hits, things will start to slow down. People are getting ready for the holidays. They get fat on turkey, and then they get Christmas cheer, and then nobody in their right mind, for the most part, is going to make a huge portfolio change coming into December. Most people wait till after the year before they make a lot of those more major decisions. So because big money is kind of starting to weed itself out and wait until the beginning of the year, you don't see a lot of things happen. So you'll get a couple of days here and there that really work well, but so you'll want to be expecting that coming into Christmas. Things can get pushed around quite a bit during the month of December just because the big money really isn't there to kind of push back, if you will. So keep that in mind. I would be looking for some sort of a more major break over the next couple days. If I get that chance on Thursday, I'll do another video for you. Otherwise, if you like these videos, if you find them educational, I do a lot more in my newsletter videos. $1 a day, $28 a month. Sign up for it on the right over there on the screen. And I do a video every day except for Saturday. So Sunday through Friday, I do videos for everybody. And it's stuff like this, except it has a lot more lines. I go a lot more in depth. We talk about the Russells. We talk about Apple. I have Apple on every single week. I put on stock trades, change those stock trades out, usually about every week or so. After they've kind of played themselves out, I move on and get new stock trades on there. So when the indices aren't moving, you have stock trades to trade. And when the stocks aren't moving, you got the indices to trade. So it gives you a really good mix of those. I follow gold. I follow oil. We trade oil. We trade gold. If that's the kind of stuff you guys are into and stuff you like to follow, I give Elliott wave counts when I see them. I'm like, oh, hey, look at this. This is where I think we're at in the more major Elliott wave. So every once in a while, I throw all those out there to give something kind of a little bit for everybody. I think it's from an informational standpoint, I think there's a lot of strong content in it. So you end up with about a 15 to 20 minute video every day from Sunday through Friday to keep you in touch with here's what we're looking at and this is what to expect next. And then on occasion when things are really moving, I'll do an intraday update and send you guys a PDF in the middle of the day saying, hey, this is what I would be looking for. Guys, keep your eye on this. I think this will be important down the road going into the end of the day. So anyway, I think it's a good deal. If you guys enjoy what you're getting in these videos, you're going to love what you get in the newsletter videos. No obligation to stick with it, so if you try it for a month and it's just not your cup of tea, you can cancel. It's great. You haven't burned a lot of money, about what you'll spend on a nice dinner someplace. And then we're coming into the wintertime months as well. Things start to slow down. The mentoring, this is a great time to do the mentoring. I know you guys get busy sometimes with the holidays and whatnot, but I work around your schedule. If you've got a couple hours this night and a couple hours that night, we sit down, we work on things. And because things start to slow down in the markets, it prepares you and it allows you to get ready for the more volatile times in the markets, which is when the mentoring more than pays for itself. That's when things get crazy and you don't know exactly what you're doing, that's what we fix. It tells you what to do and when to do it. It teaches you when to get in and when to get out, and where to put your stops and why we put our stops there, and the psychology of the markets and why you're looking for these type of highs and lows and what to expect at those different places. There's a lot in the course itself. It's a 20 to 30 hour course by the time we get through it. It's basically going back to college is what it is. So it'll tax your brain. Believe me, you'll be tired. After our sessions, you'll be tired. So think about that coming in the last couple months of the year too. It's always a really good idea. You can never go wrong educating yourself, and you can never go wrong learning how to protect your money. That's for sure. All right, guys. We'll let you go. I'll be back with you again, hopefully Thursday. I will say that, and I usually get one video done a week, but I'm really going to make a concerted effort to get something done for you on Thursday. By then, we should have some more major move happen in the markets, and we can kind of catch up then. See you then. Bye.